welcome back to Yahoo Finance Live. Want to talk about what's going on not only in the electronic game space, but also how SPACs are helping fuel this, not only the electronic game industry, but SPACs in general, 35 plus billion this year alone. And somebody who should know that well because he's got 3 of them is Niccolo Masi, former Glu. You're not the former, you're still CEO at Glu, aren't you?
No, I'm the chairman of Glu now.
The chairman of Glu Mobile, as well as DMY Technology Group CEO. How do you do 3 SPACs? And then 2 of them have already acquired companies, and they've done it pretty quickly because you have a 24-month window to fulfill all of that, don't you?
Yeah, that's correct. But at the end of the day, investors care a lot, as do we, about time-adjusted returns. So if we can move quickly and find a great partner or business who wants to work with us, why not transact quickly? Look, I think they always say it takes 10 years to be an overnight success. There's a lot of truth to that, right? So we are effectively monetizing a pipeline of entrepreneurs who we've known for a long time. There's a trusted relationship already. We're obviously seen as experts in the space. I've done 35, 36, 37 M&A deals in the gaming business as a public company leader in the past 2 decades. So it's a really good fit, I think, for where a lot of Glu's successes come from, via acquisition. SPACs are kind of the purest expression, I guess, of what I'm good at and what I enjoy doing professionally. And so we expect that we will transact, in a similar time horizon for our 3rd SPAC as well.
How has COVID affected this strategy at all? Gaming specifically, obviously, we've seen a huge uptick just in terms of the number of users, but also just how it's affecting some of the deals that you're making and also just possible opportunities out there.
Yeah, well, look, I've seen actually the same investors 6 times this year for my 3 SPACs and Glu Mobile. We did a secondary at Glu in Q2. I did an IPO for my first SPAC in February, found a deal in July and announced that, raised a PIPE for that. Second SPAC was August IPO, October PIPE deal announcement, and now 3rd SPAC. So 6 times similar thematic gaming investors. And I'd say this, the COVID, impact is a bit of rising tide lifting all boats. At the same time, there's permanent behavioral change that we believe has come into the market this year. So we're seeing an enhanced level of ARPDAU, average revenue per daily active user. We're seeing bigger spenders in both the gambling and the free-to-play space. And I think there's a lot of people now that are looking at their lives going, yeah, I'm not sure I'm more productive driving 3 hours a day to commute to the office. I'm not sure I need to actually be in a land-based casino. I'm having a lot of fun talking to my friends here online. So we think there is a tailwind that's going to last permanently for many years here. When the airline industry gets back to normal in 2023 or beyond, maybe there'll be some reversion to this behavior. But right now, I think it's guns blazing on gaming, and it's picking up a lot of market share of people's incremental time these days at home.
You were talking about the deals you did, Rush Street Interactive and Genius Sports. I'm curious, when you, as somebody who's launched a SPAC, are in negotiations with a company that you want to bring public, how do you convince them that this is the way to go as opposed to the old-fashioned, have the underwriters with the roadshow, that you're going to make them wealthier faster than the old-fashioned way?
That's a good question. A lot of it comes down to that trusted relationship, whether or not we as SPAC sponsors are seen as highly value-added board members. It's also really fundamentally a strategic decision for companies. You can go public in 2 years with a normal S1. If you're really famous, you might have a direct listing option. But in our size range, and we focus on the $1 to $3 billion enterprise, pre-money valuation zone, we offer really a full suite of services and value add. A lot of the companies that we work with don't have public company infrastructure. Rush Street Interactive just announced the CFO in the last quarter, but when we actually raised the PIPE and announced the deal in July, we were still searching. So Harry Yu, my partner, was the former CFO of Oracle, Accenture, and EMC, and he's instrumental in this process. I think that being able to talk about your forecasts, with the merger proxy that comes with a SPAC is very powerful. I think the extra liquidity is very powerful. The certainty of valuation, the fact that if you look at my SPAC deals, Rush Street is trading today at $13 or so. Genius is trading at, $10.50. Neither of these deals doubled or tripled the day they were announced. And that to me is a really good sign. It means that we are pricing fairly as SPAC sponsors, and we're not leaving a lot of money on the table for not the company, right? For other investors. So we're effectively providing a healthy tension with our underwriter, Goldman Sachs. And we do have the premier technology franchise underwriter in our camp, but we're also guiding valuation in that discussion with Goldman Sachs and the company to frankly get the company a better price. And we're also helping them get the PIPE investors in there to validate the price. Fidelity led our first PIPE transaction for Rush Street. And for Genius Sports, which is a really wonderful SaaS duopoly business that provides data to the global sports betting market, it's underwritten, in the PIPE by similarly powerful fundamental investors. We actually raised a bigger PIPE in Genius than we had in the SPAC trust account, which is a really big sign of confidence in the marketplace.
When you take a look out not only into next year, but beyond into 2022, 2023, how popular do you see SPACs getting? I mean, what's the percentage do you think of companies going public? They're going to prefer to do it via SPAC rather than direct listing or the traditional IPO avenue?
Yeah, well, look, the trends are pretty powerful. Believe it or not, I've been following the SPAC market since I sold my first public company in 2007. And they've come a long way from off the beaten path and almost a curiosity even 4 or 5 years ago. Today, it's 50% of equity capital markets volumes in 2020 are SPAC IPOs. So, I'm not going to sit here and promise that it's going to always be more than 50%, but they're here to stay because they're a really powerful feature with a quality underwriter, quality sponsor team, quality company, driving an ecosystem and bringing companies to the public market that frankly have been scared off in the last 20 years from the public markets. If you think about how many public companies there were at the time of the dot-com boom, twice as many as we have today. So there's been 20 years of private equity companies picking companies off and people being afraid to list their business earlier on. It used to be when you were Apple or Microsoft in the 80s and late 70s, you would IPO your company as a growth stage business. And people shied away from that. So I see my job as a public company entrepreneur and someone who's done 6 public companies and been, fairly successful, but enjoyed my time in the public markets, is really bringing in the next generation of great entrepreneurs and earlier stage growth opportunities to get everybody in the marketplace able to participate in that. So I think they're here to stay, to answer your question. And I think they're going to keep getting more institutionalized. You're going to see quality differentials between a Goldman Sachs 3 times issuer like myself and my partner Harry Yu at DMY and first-time issuers that can't command the attention of a Goldman Sachs for track record reasons. You're going to see differentiation in the pipes from quality investors like a Fidelity, a Wellington, a T. Rowe, a Capital Research, a Caledonia, et cetera. These are the kinds of people that you want in your pipe because they indicate quality. They do their diligence and they're long-term holders. And so you're going to see continued demand from fundamental investors coming into the SPAC space with the platinum teams, the top 5 or 10 teams that obviously we consider ourselves to be one of.